Hi there, my name's Eric Imbleton with AEI Financial Strategies, and I'm a health insurance broker and work a lot with small groups and small group health in California. One of the things we do is we work a lot with telling people exactly what they need to be aware of during the Affordable Care Act, which is now in effect since 2010. Every year since it started, there's always been new additions and new things that they've added to make employers do more than they did in the past. And one of the things is they have public and private health exchanges that are coming online. The public one, of course, in California is Covered California, which you may have heard of. There's also a private health exchange called California Choice, which I've worked with for years. And the other thing is the health plans are now classified all in metal categories. So you have a metallic bronze, silver, gold, and platinum to choose from, and within each of those categories or metallic tiers you have about 5 plans to choose from. So your employees can pick, or you can pick for them, and you usually will contribute to that at least 50% in either case. Tax credit wise, there's also a way for you as an employer to get a tax credit when you sign up for a small group health plan. The way to do that is basically consult with a tax accountant, which you can consult with me, that's what I also do, to find out if you qualify. And by doing so, you can actually save yourself up to almost 50% of the cost of the plan, which in many cases is a great deal. In that case, you really can even come out ahead in some cases if your employees are earning less than $50,000 per year on average. The other thing is you now have to W-2 report everything that happens with your health plans. So on the employee W-2, you have to include a portion in there of what you paid for the health plan. So for that individual employee, not for his dependents or her dependents, but just for that employee. The other thing is the essential health benefits are now having full definition of being enforced. So that means you have 10 essential health benefits that didn't used to exist. So that means every time you buy a plan, you really are buying 10 essential health benefits. In the past, you could avoid that and just buy a catastrophic plan. Those went by the wayside. There's no chance to have those again. Then you have a requirement now to inform your employees of exactly what you're going to be giving them, what they have, what their plans include and don't include, full disclosure. The other thing is you have automatic enrollment. Employers with more than 200 employees have to be automatically enrolled in the plans. Number 9, you have limits on flexible spending accounts. In the past, you used to have a different set limit, but now as of 2013, the yearly limit is $2,500. This is indexed for cost of living after that. The other thing is the employers have a play or pay mandate, which means that now they are actually going to be paying if they have more than 100 employees. It used to be 50, but they changed it last year in legislation. So if you have more than 100 employees, you definitely have to have a plan. If you don't have a group plan, you pay a penalty, and the penalty can be rather steep. So there's a couple of different penalties which I can go into more detail later, but those penalties can add up to thousands of dollars per month based on the number of employees you do have. So thank you for listening.